Hi, I'm Danny Ecker with the Chicago Business Today Midday Report. The city's sale of more than $400 million in bonds backed by water revenue yesterday drew strong demand from buyers, enabling the city to save around $10 million in long-term interest costs, and again underscoring the appetite from investors to take on city and state debt. For more on the bond market, I'm joined by Crain senior reporter and Washington Bureau Chief Paul Marion in town ahead of the NATO summit. Paul, what was significant about this deal in Chicago compared to other highly rated bonds?
Well, the city has been paying a premium compared to the highest rated bonds out there because of its financial situation and so forth. But this time around, it not only got a low interest rate because all the interest rates are low now, but the difference between what Chicago pays and what highly rated cities pay narrowed significantly.
Right, and that bond market is white hot right now. What does this say about Chicago's plans to sell more bonds this year?
Well, it's got a $600 million offering of general obligation bonds next week, and every tenth of a percentage point that it can save saves millions of dollars.
Right, and then of course the market being so strong for bonds right now, all this talk comes amid the talk here in Chicago of pension reform. What role might bonds and borrowing play on that front?
Well, the talk of pension reform was probably an intangible factor in creating demand for the bonds. The city increased water rates significantly and made the financial backing of those bonds much better. That was the tangible factor, but pension reform also probably played a role.
All right, Paul, thanks a lot for the insight. We'll have you more with you on the NATO summit
Sounds
as we
good.
go forward. Thanks.